Hello and welcome back. Today we're going to talk a little bit more about life insurance, more specifically permanent life insurance and its living benefits. Yes, permanent life insurance does have living benefits. It is not only used as a tool for death. There's things that you can do in order to utilize this policy to your advantage while you're still around. And you can enjoy that with your family, as a matter of fact. So there are different reasons why an individual would take a permanent policy as opposed to a temporary policy. Permanent policies have more value to themselves in the fact that there is a cash account that's being built, or whether it's separate as in a universal product or built in with a whole life product, there is still money that's being built inside that policy. So as it grows, you're able to utilize that. Maybe 10 years down the road, your policy has a cash value of $10,000. Maybe you're looking to purchase a house. Guess what? You could use that $10,000 and you could take a withdrawal from it in order to help with your down payment or your closing costs with the house. Let's take it a step further. What some individuals do is they will take out a universal life policy and go with a index or a variable universal life because they will be able to participate in today's market. Over the last couple of years, the market has been very bullish. Many people have made a lot of money. A lot of those individuals inside their life policies, it's a quick way to grow your assets. But keep in mind, ladies and gentlemen, you are invested in the market, so there is potential upside and downside risk. Individuals will create these cash accounts in order to, believe it or not, save for retirement. In some cases, if a life insurance plan is designed properly, by the time you retire, you can do one of two things. One, you can set it up to where you're no longer paying your premium and your life policy has essentially paid for itself and will continue to carry on until the inevitable, which is death. The other aspect is using it for retirement. So you retire at age 65, the advisor sold you a life policy that at the age of 65, you would be able to withdraw $15,000 a year until the age of 80. This would go on, and believe it or not, depending on how the policy was set up, it would not deplete the value of the cash account in the policy. And you would in fact have a remainder left as you continue to live. It all depends on how the policies are designed, but there are very useful ways to use life insurance. It is also a great vehicle for tax purposes. A lot of high net worth individuals will take out a single pay life policy and buy themselves insurance. Let's just say $500,000 buys them X amount of life insurance. They make the lump sum payment immediately. Their policy has cash value that they're able to utilize while they're alive. If anything is to happen to them in the event and there's money that was owed and withdrawn from the policy, then the beneficiary would actually receive the death benefit minus the value that was withdrawn or loaned. This makes it very great for the other individual or the beneficiary for the simple fact that the death benefit paid to them is absolutely tax-free. So it's a great tax shelter. It's a legal tax shelter. And a lot of individuals will refer this as a LIRB, which is a life insurance retirement plan. LIRB. Thank you, and I hope to see you next time. I appreciate the time. I'll see you again.